Hello traders, welcome after a Christmas break. My name is Tomasz Wiśniewski and I'm a Chief Analyst in Alpari Research and Analysis, and welcome to our daily analytical report. Well, this week won't be very busy, the calendar is almost empty, volatility is thin, volatility is low, liquidity is thin, but who's on the market for a long time just got used to it. And this is the time that not many traders sell assets on the market. We can focus on anticipating what's going to happen in 2017. Many traders are just closing their position to close the year, to close whole year. Like for example, this thing is happening on gold right now and other precious metals after a strong decline that we saw recently. The price is now going up, and we can assume that this may be taking profit action from many traders who earned decent money on the drop on the price of gold and other precious metals. But okay. Let's take a look on the charts right now. Maybe let me start as always with the economic calendar. No tier 1 data. Let me adjust the filters here. As you can see, all week we can close really on one screen, which is not happening very often. Also, no top data this week, as you can see on the speech from Mr. Kuroda from Monday, but it wasn't anything significant, to be honest with you. Today also data from Japan. We are still going to have data from United States. Again on Wednesday, Japan, housing market from United States. On Thursday again Japan. Important data for the oil market, so EIA crude oil stocks change. And on Friday also data important for oil, and Chicago Purchasing Managers Index PMIs. So as you can see, calendar is almost empty. No game changers from the fundamental point of view on the market. That's what usually is happening. If you have to trade, if you're up for trading in the last week of the year, we have some nice trading setups for you. So first, gold. I want to show you some interesting setup on gold. You know this recent downtrend, but what is the best thing here is that this downswing was paused by 6 corrections. Maybe let me change the color here. First one was the flag. Downtrend, trend continuation, pattern of flag, a breakout. Then flag again, breakout, then was that flag again, then here, flag again, here pennant, here a pennant again. So 1, 2, 3, 4, 5 trend continuation patterns resulted in a downswing, in the trend continuation, and sixth one, as you can see, this pennant didn't result in a trend continuation but was denied, and we actually got a bullish breakout here. And this breakout is significant because also, along with breaking the upper line of the pennant, we broke the bearish trend line here, right? There's red line connecting recent lower highs. So this breakout is strong and is significant, but there are two obstacles here. First one is the reaction here. So sellers managed to drag the price lower, and we have a long head in this H4 candlestick. Second one is the fact that I mentioned at the very beginning, that this may be just take profit action from the sellers, and they can be just closing their positions which they were opening from this point. They just want to capture profit at the end of the year, and they will come back to their short positions when in 2017, right? They will reopen their short positions in 2017. That can happen. Obviously, it's too early to say that trend is reversing for. It's a definite reversal because we didn't even got to 23.6 from Fibonacci. From the buying point of view, what do we have here is just two factors. So denial of the pennant and a breakout of a trend line. But that's actually it. So it would be, risky traders who enjoy opening risky trades, also those who trade only short term, can think about opening long positions. But for me, it's still not enough to go long here. But that is just an interesting pattern, that we had 5 trend continuation patterns, and then 6 didn't result in a trend continuation, but resulted in a trend reversal. That's what is interesting here on gold. But this trend can be a perfect example of how trends should go, and this part can be used as an example in technical analysis books about trend continuation patterns. If gold is giving us mid-term, short-term buy signal, is silver doing the same? Well, it was a few days ago, but it was a false signal from 21st of December, where we had this hammer on a long-term support, as you can see here. That was a false signal. It is a very important support, as you can see. It was a resistance in February, it was a resistance in March, it was after a breakout, it was a support in April, in May, and in June, and it was also a support at the end of December. And this hammer on a daily candlestick seemed very powerful, but then price went lower, and now we're having an optimistic candlestick. So this can be this is actually a good sign for buyers. And what we can have here in the short term, as you can see, inverted head and shoulder formation. There is a left shoulder, head and right shoulder. To buy signal, what we are missing is a breakout, I would say, of this decline line, which is a proper trend line, but also this horizontal resistance here. So I'm not thinking about opening long positions right now, but here, why not? Once the price will get here, that can be a decent occasion for going long. but only here, not before that, because as you know, going against the trend is always more risky and less probable. So that's why you should get some extra signals to go against the trend. All right, maybe if we are on precious metals right now, let me show you also indexes and oil. From the indexes, I would like to show you S&P 500. After US elections, we do have an upswing, we had a correction, upswing again. Now we're having a trend continuation pattern, which is a pennant. This formation should result in an upswing. On many instruments right now we have pennants or rectangles, which is characteristic for a flat market, for the market where we just have low liquidity, so there are no strong movements and the price is just going sideways. This is typical for a pennant and rectangle formation, and pennant and rectangle formations are typical for a time like a week between Christmas and New Year's Eve. But anyway, pennant from the technical point of view is a trend continuation pattern. So on S&P 500 we should see an upswing. On Nasdaq, I choose Nasdaq because it's also interesting. What we're having here, we are closer to the horizontal support, to important horizontal support on 4,926 points, and also we do have a rectangle here. As long as we stay above the support, there are higher chances of an upswing, so buyers should wait for the price to get here, close here on H4 candlestick chart, and if you get a candlestick close here, you can think about going long again on the Nasdaq. Now Brent is having a symmetric a pennant formation. Some of you may see head and shoulder pattern, as we said on WTI. Yes, it is alright, but almost always when you have a head and shoulder formation, apart from drawing a neckline, what you should also draw is a line connecting head and right shoulder, because in many occasions head and shoulders are just pennants. So as long as we will stay above the neckline, there is a chance for an upswing. We are staying above the neckline. We are putting a big pressure on this resistance, so maybe we'll see a bullish breakout here on oil. Okay guys, let's come back to the currency market. On currency market, I would like to show you New Zealand dollar to American dollar, where we have this continuation of a downswing. This is daily chart. Pretty impressive. 1, 2, 3, 4, 5, 6, 7, 8, 9. 7 bearish days in the last 9 sessions. Now we're having 10th session, and maybe we'll have 8th bearish day. So that's the strong decline. Decline is caused by the fact that we have a head and shoulder formation here. Also we broke the lower line of the flag. Also we broke this horizontal support, which was a neckline of the head and shoulder formation. And also that's how the trend is on a weekly chart. As you can see, this is downtrend, rectangle, downtrend, flag or a wedge, downtrend flag, and there are really higher chances that we will get to this support. To this support we still have 200 pips, potential resistance somewhere here, so risk to reward ratio somewhere around profit being 2 times larger than the potential loss. It's not the best ratio we can get, but it's still alright in my opinion, especially on this flat market that we're having right now. Very similar situation on cable to American dollar. What we're having, well, everybody knows what we're having on a cable, because on the cable we do have a downswing. There was a flag, which is a trend continuation pattern, which we will telling you about for a long time. We broke horizontal support and lower line of the flag. After the breakout, we had a retracement, and then the price was falling. We also broke a very important horizontal support here on 1.233. This is the closest resistance here. The closest support is 1.2090. It seems like we should get there, maybe not this week, but maybe at the beginning of the new week. Anyway, if what is the most important is that price should get there eventually. It looks like that. It looks like the price will get there. It looks like we have a higher odds for a downswing. So still potential movement 150 pips. Stop loss 100. Again, not the best risk to reward ratio in the world, but it's still right. Also, it was much better an hour ago when we wrote an analysis, when we recorded that for a trading sniper, I think 2 hours ago. Risk to reward ratio was a much better, because it was somewhere here. Stop loss, let's say even 60 pips, potential target 180 pips, 3 to 1. And now price is much lower than we were recording our analysis, 30 pips. It changes the risk to reward ratio, but it's nice to see that our anticipation from trading sniper works out. There's a nice potential short order here. This is euro to Japanese yen. We wrote an analysis today for FX Street about the situation. So what's happening here is correction equality movement. Look at that. This correction 1,500 pips. Those rectangles are the same. 1,500 pips. Really, you just cannot make that up. This is simply beautiful. Also, why we think that this will be the end of an upswing? Well, we cannot say that for sure, but what's happening here is that we are close to 38.2 Fibonacci, and you know that we are big fans of 38.2 Fibonacci. If you're watching our daily analytical report or trading snipers, you know that it's happening. We're not making that up, it's just happening. We are showing you examples of that. What is more, when you go on a lower time frame, what we're having here is just a head and shoulder formation. So a left shoulder, head and right shoulder. The sell signal is not yet present here, because we need the breakout of the lower line of this neckline. Also, when it will happen, I would like to see the price lower than in the last week, so somewhere here. And once the price will get there, this is the area where I would like to see the price to open short position. So far, it's just a potential, but we need to see lower lows and lower highs, and then we will be able to spot a nice selling occasion. That's what we wrote for FX3. That so far it's a bit too early. There is a potential, but it's perfect because you know about potential position before there is actual signal. And from our daily analytical reports and our publications on many portals, you can see where is the potential position. Be informed before actually you get a signal, which is perfect. And you know what you should do or what you can do once the price will get there and there. Alright, that's what we are doing. We are not spotting a situation that happened for example, 2 weeks ago, because everybody can do that. Oh, okay, 2 weeks ago there was a nice sell signal. Okay, fair enough. But did you trade it? Did you earn money on it? Not so much. What we are doing is trying to maybe not anticipate, it's a bad word, but we're spotting potential occasions which can happen, that you will have an access to this as soon as possible, as soon as the situation will develop. Okay, so that's what we are doing. We are trying to spot trading occasions before they are fully present on the market. And then you will know that once the price will break the lower line, and this yellow line and this horizontal support, that will create a nice selling opportunity. Australian dollar to American dollar, our second target is reached. Okay, our first target was this level, our second target was this level, and actually before Christmas, just before Christmas, we reached this level, and by this I mean lows from May, and now it looks like we are getting ready for a reversal. Here's a trend line. As long as we won't break this trend line, the sell signal is still on. But to be honest with you, after such a strong decline, I wouldn't go short. I wouldn't be packed with short positions too much, because it doesn't look like they can continue it for a long time. Look at that, this downswing is just too strong. Let's actually measure those impulses. Let's see how it looks like. And this one, first I need to copy that. Okay, as you can see, the first one was much stronger than the second one, well, at least for now. So actually there's still a selling potential here. As you can see, the first one was 470 pips, second one is 370 pips, so there's still 100 pips potential to go lower. But again, we met strong support, and you know that to break a support or a resistance, you need large amount of orders, large amount of money, which we actually don't have now, because the market is flat. So maybe it will happen once the volatility and liquidity will come back to the market after New Year's Eve. And for now, we'll have just a correction here. We'll see. Euro to Australian dollar. Here, you know, I was bearish. Why I was bearish? Because we had lower highs and lower lows. We had this horizontal resistance here. After horizontal resistance, we had the rectangle, and I wanted to see the price going down. We actually had a short position here, you know about that. We closed it on a break even, luckily, because it would end up with a normal loss. Not a big loss, because obviously we do have stop losses, but we would end up with a loss. We didn't. And now the price is advancing higher, showing a perfect example of how false breakouts work, because we had a false breakout of the support here, and after that the price advanced higher, and now actually we are coming above 144, as you can see here. We are coming above upper line of the rectangle, and we are aiming the trend line here. In the short term, it does not look too good for the buyers, for the sellers, because there is a high buying pressure here, this V-shaped retracement. If you see head and shoulder formation, well, yes, but it's not so strong as one could imagine, especially this retracement here between the head and the right shoulder is too strong. Well, at first it was too deep, but the second part is that it was a bit too strong. And I do not see a selling potential here. And you have to believe me, I was a strong seller here, I was a strong bear, but now from this price action I don't see the selling potential here anymore, which is for me this my view I'm having is significant. That's why I will avoid going short on this instrument. Euro dollar is completely blocked. 2 days before Christmas, as you can see, for the last 3 days the volatility is not exceeding 40 pips. So we just wait for a breakout, either the lower line, blue line, or the upper black line. Before it will happen, we cannot say much about this. Just a ugly side trend on the most popular instrument on the forex market. Not very encouraging for trading. Euro to Canadian dollar, here large head and shoulder formation, left shoulder, head, right shoulder, breakout of a neckline, and actually now we are testing this neckline. Okay, we tested this neckline once, twice, we're doing that for the third time. That's not how the proper retracement should look like, but again what we are having here is a rectangle. Rectangle is a trend continuation pattern. If we assume that it was created after an upswing, it should result in an upswing. If we assume a longer term, and that's a sell signal because buyers are not able to break this resistance. But with a definite statement, I would wait for a breakout here. Again, not a surprise. Here and here. That blocks the rectangle here. If we'll have if the price will get above and the resistance, we should buy. If the price will fall below support, you should sell. Simple as that. And again, we are spotting occasion before it happens, right? So once it will happen, you will know what to do. Last instrument on today, daily analytical report on this flat market where we're having only side trends, is Euro to British Pound, where this pair defended this horizontal support on 0.8333. Right, so we had the first attack, second attack, both unsuccessful for sellers, and finally, straight before Christmas, the price broke this line connecting recent lower highs. We had an upswing, flat correction, then an upswing again. Before Christmas, we stated that there are higher chances for the price to go higher. We still have 60 pips to the closest resistance, and in our opinion, the price should get there anytime soon, maybe even this week. In the long term, we're having higher highs, higher lows, we're having an uptrend, we are above support, so in the long term, the current situation supports buyers. In the short term as well, look at that. Had left shoulder, had right shoulder, but there was no breakout of a neckline. The price is advancing higher, so they denied this inverted, this head and shoulder formation, so a trend reversal pattern. And as they say, if the price does not want to go down, it will go up. So the movement for 50 pips higher is now very, very probable. Okay, guys, thank you for watching daily analytical report today. Remember that trading and investment in financial markets involves an element of risk. Trade this week only if you have to trade. Remember, low liquidity, low volatility, side trends. Maybe don't enter the positions where you have negative swaps. Because you will wait for the movement for a long time, maybe even 10 days. You won't have any movement and you will be charged with negative swaps. Right, so maybe if you really don't have to trade, it will be better not to trade at all and come back to the market at the beginning of the year. But if you want to trade, we are here for you. On the market all the time. We're trying to spot nice trading occasions for you. So remember to follow us on Twitter and our website alpari.news. Thanks very much and see you tomorrow.